Hey everyone. I actually was thinking of not doing a single new post for like 20 hours, which would be incredible for me, but I just can't help myself. I wanted to do one video just reflecting a little bit on where things stand before the CPI comes out. And maybe I'm making too much of the CPI. I think what happened on October 13th of last year was so traumatic that, from then on, I just assume every CPI is the most important thing in the universe. Maybe it's boring. Maybe everybody is going to come in at like 5% and it's, a snooze fest and nobody cares. I don't know. But just in case, I am anticipating it. And let's just look at where things are, what they did. Here's the ES on 1 minute bar basis. For some reason, which who cares what the reason is, it basically went up all day long and then lost almost all those gains. And then, of course, bounced at the end. Net, and I'm recording this a few minutes after the cash close, the ES is exploded higher 0.06%. So this is kind of the trapped market we're dealing with, whereas the NQ is actually managed to fall down 0.6%. That's considered a crash these days. But there we have it. And more importantly, if we back away from this to like that level, this is 15-minute bars. We can see, and this is the trend line, which Thinkorswim's charts are kind of imperfect in a lot of ways. So this is my best approximation of the trend line. Last Tuesday, we got above it briefly, and then it fell. Today, we got right up to just about touched it and then fell, which I think kind of affirms the importance of this trend line. If we go way back to the weekly, and this is what I'm saying about how the trend line is not quite perfect. You can see, it doesn't really match anymore. Slope charts just run circles around this, but I don't have real-time futures, so there you go. This is the weekly, and we are really at the cusp here. This is such an important level, 4186, that Fibonacci level, crucially important. It actually has held back prices for almost a year. It held it back here. It held it back here for the most part. There was a brief period where it got a little above that, this little overshoot here, but here, almost perfectly, here with incredible precision right here. This is amazing. Again and again, 3 weeks in a row. Look at that. And then last week. So that is such an important line. And this is the face-off I keep talking about. This chunk is the bearish pattern. This chunk here is our world is populated by snowflakes that can't stand a down market reversal pattern. So that line here, I keep calling it the line of scrimmage or the line in the sand. This is key. This trend line is kind of important, but not nearly as important as that Fibonacci. We go to the daily chart here, you can see, and I wish Thinkorswim charts were better, honest to God, because I'd rather this be positioned properly. But, what can you do? Let's look at a couple of other charts here. As far as the NQ, for whatever reason, the NQ was a little weaker today. Its Fibonacci relationship is pretty damn messy. It's just pig slop. I suppose this zone here is the equivalent of the bearish top, and this zone down here is the equivalent of the bullish. Very, very messy though. Very messy indeed. So I don't focus on that one like I do the ES, which is just squeaky clean. Crude oil has broken out, and it's really splashed cold water all over my zeal for energy shorts. I still have some, but OPEC really screwed things up. What happened a couple of weekends ago was transformative. We just leapfrogged over this trend line, and we've been there ever since. If you look at this, say, 15-minute chart, you can see here that ever since that announcement, we've just been range bound here. I mean, more or less $80 a barrel. You get kind of a sine wave going here. It's all just noise. It's all just noise. It's around $80, $81, which is exactly where they want it. So, what can you say? What can you do? A couple of other odds and ends. Is that even going to come up? Let's see. Yeah, there's Bitcoin, which has gone up thousands of dollars in just in the past couple of days. I don't know what that really means with respect to, are people seeking a safe haven? Are the bank troubles more severe than we've anticipated? Because if you look at the gold miners, you look at the junior gold miners, you look at silver, you look at gold, you look at Bitcoin, you look at Ethereum, on and on and on, they're all doing great. So is this bank thing kind of not resolved? Because people sure are fond of these unusual safe havens. Gold's not that unusual, I guess, but Bitcoin definitely is. As I've been saying recently, I've often poo-pooed crypto, saying it's a solution in search of a problem. And I really do think the problem it has finally found, it's found its purpose, which is a safe place to stick your cash. Not very innovative, not very science fiction sounding, but I guess it's the new tin can buried in your backyard. Anything else? Probably not. We'll just say goodbye via the VIX here. Pathetic thing, isn't it? It got battered down to the 18s today. It's the VIX is clearly in the teens again, which is just a damn shame. It doesn't seem even possible anymore that we can sustain anything in the 30s. But over the course of the past year, we have peaked at 36 and 35 and down, lower and lower. And for months and months and months, the most we've been able to muster briefly is a stent above 31. I mean, above 30, not even 31. We got to 30.81, and that was a quick, brief Silicon Valley Bank inspired peak. But by and large, we've been just smashed down into the Jerome Powell loving 18, 19 zone. So I don't know if anybody else will create content. I think Xerxes has said he might, but I think everyone is just as gobsmacked as I am. Like, well, what is there left to say? So I thank you for your attention, and no matter what, I will see you on the beach tomorrow morning.